What up, guys? My name is Chris. This is Wheelhouse Trading, and welcome to the Wheelhouse. So if it's your first time on the channel, do me a favor, hit the subscribe, hit the like, and if you want, make me a comment. If you are returning, just make me a little like, watch the video, enjoy, and if you want to make a comment, you can. Sorry if my voice is a little scratchy. I went to the Monday Night Football Chargers-Broncos game last night and was yelling and rooting for the Chargers. So a little tired today, just woke up from a nap, but I wanted to get a video in. And we'll keep it quick, but the main point is we're still looking good on a rally. I believe Netflix, it was a big deal. It's a large cap, and, they've had some down quarters, and, the fear of the decelerating earnings is on every market participant's mind right now. And, having a growth story on a big cap is going to be a big deal, and it'll be a big deal for all the big Dow stocks and captains of industry, and you'll notice, if Netflix does well, you'll see an Amazon or a Roku or a Disney, things of that nature will go up, and Netflix may have saved the rally, continued the rally. And I thumbed through a lot of charts, and we'll look at a few, and it does look like things are going to continue to go up. Again, we want to walk our stops up, know what we're doing is it something we're going to hold for a long time, is it something we're going to take gains on. We're still in a bear market, we're still in a primary downtrend, but we're allowed to have rallies and we're allowed to make money too. So let's just take a look real quick at Netflix. This is CNBC. It says, Netflix's message to shareholders, focus on revenue and profit, not subscriber ads. So Reed Hastings, their CEO, is basically saying, guys, whether we get more subscribers or not, our top metric is revenue and profits. And if you guys focus there as investors, you would be pleased, because that's what we're working on, and we're showing growth there, and we did get subscriber growth as well. But it says right here some of the key points. Netflix will no longer forecast customer additions each quarter in an attempt to shift focus to revenue and profitability. Netflix pointed out in a shareholder letter it makes more than $5 billion in operating profit while competitor streaming products lose money. And you have to understand, a lot of the competitors are a little bit newer, so they're, Netflix is at the point where it is, making profits. It's been streaming for a while, so, you can't hate on all the other ones as they're just getting started and dumping a lot of money into projects and new movies and videos and whatnot. So it says right here, even if Netflix asks investors to change their focus, it's unclear if they'll listen. So obviously they're a little frustrated over there at Netflix, but let's be real. Netflix came down 60% from its top all-time high, and a lot of that is just we're in a bear market, and a lot of that is has the growth story ended, and it did go down significantly in subscriber growth and other metrics, but this was a really good one for them, and it shows all market participants that it is not decelerating. They're still making money and growing as a business despite inflation and higher costs everywhere. People are still paying for their monthly service, and I believe they've even raised the price on that recently, because we're Netflix subscribers. I think it went up a couple dollars. Just like you saw that big drop in Apple, which is a big weighting in the indexes, and it created a drop across a lot of the assets in the stock market and crypto market. It did bounce back, but it just goes to show you a little bit of bad news can really freak a market out, especially with a big cap that has such a weighting in an index. So when Netflix was coming out with their earnings right after the bell, it was kind of make or break. It was like, is this the end of the rally? If Netflix fails and they surprise to the downside, it's going to be a problem. If they do well, it's most likely going to be great. And, you could see a lot of green in the after hours. And in a minute here on TV, I'm sure I'll see the futures, but I'm assuming the futures are up. So yeah, they want to, they would like investors to focus on revenue and profit and stop obsessing about subscriber growth. The company's rationale behind the change is to get investors focused on revenue instead of customer growth. Now, I heard something on Bloomberg earlier. It might be in this article, but a lot of people are sharing passwords, and I think what they're going to do is when they find out that you're sharing a password, they're actually going to ding your card as the main subscriber a little bit more since you're sharing it and they know it. So, those people that are sharing it, they're going to get their money one way or another, it sounds like. So that'll end up showing up in the profitability as well. Yeah, we are increasingly focused on revenue as our primary top line metric. Netflix wrote, as it reported third quarter earnings Tuesday, this will become particularly important heading into 2023 as we develop new revenue streams like advertising and paid sharing. Paid sharing, that's what I was talking about, where membership is just one component of our revenue growth. Netflix will continue to provide guidance for revenue, operating income, operating margin, and net income, traditional metrics of profitability. And it will still report subscriber ads each quarter. It just won't forecast what's to come. So, in the end, they beat on subscribers. I think the Wall Street estimates were around 1 million, and they did over 2. So that was huge. And then revenues are increasing, and they kind of put markets at ease. So I think that that's going to give a continued rally, and you can see that in the charts. If we come over here and we just look at our indexes first, this is the Russell. Okay, yeah, this is the Russell. So I did a little bit of work on the charts here before the video, and you can see this blue one. We're still in a primary downtrend. Here's our June bottom low. It bottomed. It came back. So it triple bottom. It broke through, and it's at this trend reversal line. And it actually, the wick went a little bit above, but these blue dotted lines show that the body is just below. So, it's okay. We're making progress. We're still, from when I made a video a few days back, when this thing first turned blue, when this goes blue and it turns, it goes up. When it goes blue, it turns, it goes up, okay? When it blue turns, it goes up. Just like when it's red and turns, it comes down. Well, we're still blue, and we're still looking good. Now, this looks great over here. This looks phenomenal. It doesn't look like it's ending to me. This doesn't look like it's ending. This looks like it's just getting started. So Russell's looking good, okay? Now, the SPY went up 1.14% today, and even though it keeps flirting with going below, it's blue. There's your green triangles. Everything looks really strong on the SPY. And, these ribbons, I don't know if we're at the, where we're at on what EMA, but we're moving up and moving forward. And if you notice, the body is right on this line from this previous pivot low as well. So, sometimes there's some down days, like here, look at the Dow. Sometimes there will be some down days, like right here. That was pretty scary, right? But it went blue here, it went up, and it came down, but this stayed blue, and here we are going. So this measures and it calculates a lot of different things. And one of the things that it calculates is there more, buying than selling? Even if, you go way up and you come way down, and even if it's just a little bit less selling than there was buying, it'll stay blue and that launch. So it kind of is a guideline and keeps you in the game. And like I had said, we broke through the June bottom low over here, but we created this new double bottom, and we broke out of the June bottom low, and looks like this trend reversal, this first little trend reversal, which is really good. So all your indicators look good on the Dow. I really think that Netflix is going to play a big part in a rally today, continued rally, and that's the hope. And we just never really know. Expect volatility, expect profit taking, but we could just be getting started. And if this thing just went blue right now, at one point this one just went blue and it went way up for a while. So we could come up to here, we could come up to here, we could come up to here. And my original theory of us coming up and bouncing back and forth, could still play out. We'll just have to see. So Dow's looking good. And we have a little less than 1% on the NASDAQ. The NASDAQ, not as much movement as the Dow, but you're blue here, and we certainly are moving in the right direction. We are at a resistance, so we're going to want to keep an eye on that. But if you recall, the NASDAQ did a little better last week than some of the other indexes. So Let's look at Bitcoin real quick. Now, Bitcoin's still going sideways, but holding. I would rather go sideways and be holding than dropping. So we're holding this 19,000 area between like 18,900 and, around 20,000. We're kind of just range bound in this little sideways movement, but indicators are also showing indecision. If we back it up to the hourly, it looks like it's probably going to be coming down, but since this is getting close to the price action and we're seeing a doji, we might actually turn tonight, which would be cool. Let's go take a look at a 30-minute real quick. Still looking like it's coming down. Let's look at a 5-minute sideways, leaning towards down, and on the 1-minute, kind of leaning down. So, it might come down a little bit more. We're at 19,273. It wouldn't surprise me to go down to 19,175. 19,000 even, and bounce back up. So let's take a look at some stocks real quick. We're going to stay on the daily. When you get bullish to the daily, it's impressive, and that's where you really want to be. So if we're really paying attention to the price action and we're keeping an eye if this is blue and all of our indicators are looking good and sinking, well, it kind of lets us know. So you're getting the blue cloud there. This is blue. Everything crossed. Your volume's going over the baseline. This is DFEN. DFEN is a triple leverage bull in the aerospace and defense industry. Had a big day, 12.1%. Upstart, a couple really big days in a row. I have a lot of Upstart, so when Upstart moves, it really helps my portfolio. There's a couple stocks I'm overly invested in. One is Upstart, another is SoFi, another is, I think, DraftKings. So I have a lot of FNGU as well. So when any of those move, I get a big movement in my portfolio. And yesterday on Monday, it was a crazy day. I think it was almost 4.5% in my total HODL portfolio went up. That's not normal. That's not natural. That's something that shouldn't happen either going up or going down. 4.5% in an entire well-balanced portfolio. Well, I just told you I got a lot of Upstart and some other ones. But I do have it is pretty balanced. I'm a little overweight in some things. But 4.5% is pretty crazy. So, yeah. And then today, I'm up 2.15% as well, which is pretty crazy for 2 days. So if you just kind of look at this thing on Upstart, yeah, you had a high of 403. But what I want you to see right here is this was the IPO price, the opening price. And this yellow line basically indicates it. And you could see it's kind of bottom, and the price action where the little blue lines right here, it's above it. So you're basically buying at the IPO pricing. This is blue. And price action, see how this is blue? And price action is just going above it. So, Upstart's having some big days. I think yesterday was even over 7%. Today's 7.5%. Monday is it's working on getting stronger. It looks like it's going to come up, and it got its first blue candle. It's not perfect, but it is showing to me that it's going to come up. Affirm is another one that I've noticed has been moving. Had its low over here, made a second low here, and it's kind of been holding, kind of going sideways, and we're starting to push up, kind of like you notice on like a chain link or something like that. It's been doing that too. But this had a high of 177, which is really overvalued. But if you notice this bottom line, this is way under its IPO price. So you're getting, the best price in history on this stock. Granted, I will say, be careful with Affirm because, these buy now, pay laters and a lot of these credit companies, there's going to be defaults. I would think that there will be. We'll have to see. But typically and historically, these companies do get a higher default rate in a recessionary environment. And Terra Resources, we'll just go through it real fast. It's one that I like. I've gone through it with you, showed you the 3-year cup and handle. It is in a bull run. It slipped below the 200, but it's back above it. This is blue, and it is in the energy sector and showing strength. So I really like it. I've been doing well with it, and it seems to just keep going up. It went up another 5.51%. DocuSign is incredibly low. DocuSign's used in the business world everywhere, and I like the company. I really like the company, and this is just an incredible price. You can see the blue line coming across, and over here, this is 2019 pricing. So this thing went as high as 314, and you can buy it right now for $48.31. I mean, it really just had its low on this candle. And you just got a doji, a pretty flat candle, and first momentum candle, which is your 5.5 today. So lowest zone in several years, DocuSign, okay? Lucid, really low price. I think your lowest price is about $10. And again, it just came all the way down here. If you want Lucid for the long haul and you're going to hold it, you could trade it as well. But, you're showing some strength. It's definitely not perfect, but it does look like it's going to go up. And $13 a share on Lucid, it's a low price. However, when you dig into the company, they make cool looking cars, but they got problems with their cars, and they definitely have problems with their manufacturing, and they have problems with their finances. So, I mean, they're already going back for more money, and they've done a couple shifty things with those warrants and some things in the past that cause concern for me. But, in the end, it is part of the EV space, and that's a phenomenal price. ChargePoint, it's also a good price. It did go at one point down to $8.50, but I don't think you're going to be getting it way back down here again. This is not blue, but you did get your first candle. You did get a triangle, and it appears it's going to go up. Edit is in medical. This is blue, and it's a bounce off support. So I'm noticing we're getting a lot of key bounces or retests off of supports, and this is one of them. SoFi is another. I'll just show you. SoFi is another. See how it came down? It bounced here, and it retested, and it's bouncing again. That's a good sign. That might be that SoFi is actually going to start an upward trajectory. Salesforce, I just wanted to go over it real quick. I was just looking at the chart here, and Salesforce is another one, kind of like a DocuSign or Upstart we were looking at. Let's see if I can get it all on the screen here. Okay. You can see the little blue line that goes across. That's the current today's price action. So this was, in the pandemic. So we're talking a couple years back, April 2020, and this thing went as high as 311, and you're exactly half the cost right now. So it's 100% upside from where you're at if it went back to all-time high. And just to kind of remind you from a technical perspective, this is the lowest that it's been just a couple days ago, and it's starting its ascent upwards. So, Salesforce definitely that's the low price. That's a low buy spot if you're looking to get some Salesforce, and it's a good company. Shopify, this is one that's really kind of been grinding on its bottom, slipped below, and it's about to have like a little mini breakout, little reverse breakout. You can see it's right on the line. So I would think the day you're seeing this, which will be Wednesday, Shopify, if it breaks that line, might actually get a big volume spike and run wild with it. We'll just have to see. And you're looking for a double breakout right here at 3204. CrowdStrike, I'm a big fan of CrowdStrike. I own it. I think I'm down on CrowdStrike. I don't know where it is. Let me just look real quick. Yeah, I'm down on CrowdStrike. It's in the after hours at 161.80. My price is a little bit above that. I'm probably down like $6-7 on it right now. I might buy another 25 shares. It looks like it's about to go red. It's having its own little reverse breakout off of a pivot low support. See how it came right here above there today. It's on the 200 on the hourly, but it's got this pivot low right here. So there's another one, and now you're getting it on the daily. It does look like it's going to continue going up. I like CrowdStrike because I believe there's a lot of cyber security needs in the world right now, and it's just a crazy time and good time to have cybersecurity in your portfolio, and it's a good diversifier. Just like having DraftKings is sports betting, or NRGU is oil and energy, and CrowdStrike is cybersecurity and ChargePoint. My new Green Deal, and Edit's going to be like some medical, and it's good to have a well-rounded portfolio, because even though green tides will lift all boats when the indexes are happy, it's going to come down to fundamentals, and there will be favored sectors. So even if green tides lift all boats, a lot of the money might go into certain parts of the 11 sectors. So keep that in mind. Now, DraftKings, I do have a lot of it, and it's kind of tested here and bouncing. We'll have to see where it goes. To me, it looks like it's about to make a bullish move. Palantir has been on an upswing. It kind of just moved slowly up. It got a little scary, and it kind of had a little bounce. So that's looking good as well. Square had this is one of those ones where it was very, very low. Okay, and I drew this yellow line in so we could see it. Here's the COVID low. So this is pretty deep into the dip. And if you notice, even further back, these were supports. Back here, before the bull run and COVID, went way up, went all the way to 290, came down, tested it multiple times, and then broke down through it, which was scary because I had it, but it didn't stay down long. It literally just kind of came down, purple doji, blue doji on the line, and came right back up, and it looks like it's going to go up. So Square, pretty much, you're within $1 of the best price, that we've seen in years on that. Sunrun's been doing good. That's solar. But it's not showing as good a strength on it quite yet, even though it had a decent day. Goldman Sachs is showing strength here. And that's a good company. Now, Goldman Sachs had an earnings. I didn't read through it, the whole thing, but I got the gist of it. And they had problems, but they were able to trade, through their fixed income trade desk, and from what I understand, and that's just what you got to do. When you're a business owner, if margins are going to get tight, sometimes you do layoffs to save on some payroll, and if you have to go where there's momentum and find a way to keep those numbers accurate, then you push hard into that sector. And what they did is they went into fixed income, and they traded a lot in there to make up for some of the losses in other sectors of their business. Remember, a lot of these companies had deep roots in Russia and had to pull out, and you're starting to see some of that pain in these reports. So Amazon, I'm sure Amazon is going to get a bullish move because of the Netflix. So Amazon just went blue here, blue triangle, big candle, and the indicators are looking good. Roblox has been on a little bit of a tear lately. Roblox kind of came up, hit resistance at the 200, and just kind of rounding. So look, in the end, ARKK, same thing. There's your low. Let's back this up. The reason I'm showing you this is because this is the bottom of the COVID low, this yellow line on the bottom here, okay? And the reason I'm showing you this is if you were going to buy this thing, like a lot of people did, way up here at 160, why not get it at $37? Which is pretty much a couple dollars away from the COVID low of the V shape, the very bottom. That's this bottom yellow line. Okay, that was 32. You're at 37. I mean, you're $5 higher. I guess what I'm saying is the chances of it going down a lot further are lower than the chances of it going up higher with a long time horizon. So we're at these really attractive prices, and I continue, as I'm like, oh, I'm profitable. Should I take my money because I don't trust this market? And then I look at the chart and I'm like, I don't know. Am I really going to get Airbnb, at like 108 again? I kind of like that I'm profitable on it, but I also kind of like that I had buy spots at 115, 110, 108. Those are good buy spots on Airbnb for me. And, I think $130 was the low that it had for years. And it double bottom there over the course of like 2-3 years, if I recall. So getting stuff down here at 108, 110, I think it's up now. Airbnb, yeah, it's up at 120. So I put 120, and I was telling you guys a couple of videos back, I was like, look, 110 is kind of a no-brainer on Airbnb, and here we are, we're up $10. It's gonna wiggle, but we just gotta trust our indicators and trust the system, and let it do its thing. And in the huddle, you're at the mercy of the market movements, but a lot of the crazy stuff is kind of behind us. I'm hoping, at least. And the inflation's still really a big deal. You gotta have capital protection. You gotta be smart. And trading it, I do it every day, but these are good investable prices. In fact, my trading's been so good. Today I traded, I think it was like 88% win rate, and yesterday I was up at like 94, 95%. The guy got as high as 96%, and my profit factor was over 7, which is insane. So yeah, definitely if you want to learn to trade, like we got some really cool stuff we could show you. Asana. Really big week last week, kind of just oscillating, going sideways. We'll keep an eye on that. This Bulls one, I was telling you guys about Bulls. Bulls is a basket of 10 different, might be more than 10, hold on. So Bulls is Salesforce, Square, Amazon, Apple, Google, Nvidia, Microsoft, Tesla, AMD, Adobe, Qualcomm, Facebook, Netflix, Micron, Semiconductors, and Intel. You get all those with Bulls, and check this out. I'm up on Bulls. One of the guys in my group gave it to me. And check this out. It's $2.55 right now, and this thing was up at $35. That's over a 10x. That's over a 10 bagger. And guess what happened? It's at its lowest. Okay, the lowest it ever had was 207. It's had a couple good days. I bought more right down here, but the low was right here. Like the lowest ever was right there. And you're just right here. And look how far down it is. And it's way below its IPO. So, I mean, a basket of those great stocks at such a low price, and it's triple leveraged, okay? It's probably a pretty good one. Disney should have a good day tomorrow because of Netflix. And you can see it did. And see how I have this orange line? What I did, and I told everybody in my group, is my high convictions, what I did was I went back to IPO prices and all-time lows, and I just put limit buy orders in on them. Disney was one of them. So if it has one of these orange things, it auto-picked it up for me. And I had some stops hit. I had some things buy. A lot of things auto-triggered. The reason I did that, and I told the guys in the group that I was just going to go ahead and identify these lows and just put limit orders in, is because it's going to take the emotion out. Because I believe that when we go down to those lows, it'll be a capitulation day or a scary day in the market, and I might hesitate. But if I just did the limit buys and thought logically about the price on a hodl, then it would be good. So I think it was 100 shares. I'm almost positive it was 100 shares. I mentioned I wanted to buy 200 more shares, but I think I only bought 100. But it did hit it. It did hit it, and it added 100 shares, which was an average down for me because I think I was at like 107 or 110 or something. So it was a little average down for me. So it's pretty good. Apple is showing strength. It is just now getting blue with the triangles and coming above this. So remember, recently this thing was at 176 when this went blue and this went all the way up. Well, I think that that's what's coming again. I think that this just going blue, if you were to buy this at the 143 area, 142, 143, this thing could come back to 176. And as long as we catch a rally right now, and I think we're going to, I think Netflix is going to be a big deal for that. And you're going to start seeing the PayPals, the Googles, the Nvidias. You're going to all start seeing them making this blue, finding their little local bottoms and trajectory upwards, okay? Google's looking good. Amazon's looking good. Disney's looking good. PayPal test went up, kind of test a little fell, but bounced back and it's on its way up. We do have an earnings coming. We're going to keep an eye on that. Look, there's going to be problems in the chip space, but let me just tell you something. AMD, Nvidia, there's going to be problems. But ask yourself this. Are people going to drive cars in the future? Are people going to need computers in the future? Are people going to use cell phones and smartphones and smart tablets in the future? Yeah, they are. There was over-ordering. There's a gluttony of ordering because of the shipping supply lines and things going on between the U.S. and China and things like that. Yeah, it's going to decelerate, but there's always going to be demand for these companies. They're not going bankrupt. And again, I cannot stress the fact enough that AMD and Nvidia are great companies, and getting these prices with a long time horizon. I'm talking long time horizon. Don't stress it. Okay, it came all the way down to 108 and it bounced immediately back to 121. 108 to 121 in 2 days. I mean, I grabbed 50 shares. And look at this. This just happens to be, again, look at that. Support, 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 support. So this is a level, guys, on NVIDIA. I'm just going to show you Microsoft. I'm a big one on Microsoft. I like having some of these big ones in my HODL portfolio when I do investing because the way that I balance things with position size, I like to have specific, I call them anchors. Microsoft, Apple, these are anchors in my portfolio. They don't go up a ton. They don't go down a ton. They kind of keep things a little even keel from all this erratic, speculative, meme, small cap kind of stuff. I put those in there, but I put them in with smaller percentages. And Microsoft is an iceberg. Okay, it's a juggernaut. It's an anchor. And getting Microsoft down like this is super rare. I'm just going to tell you. If you're new in the stock market, Microsoft, this is really rare. If you've been in the stock market for a long time, you know that this is rare. These are great buy areas for Microsoft around this 225, 238. Try to get yourself some if you can. I mean, and be proud to own some Microsoft. I'm an Apple guy. Everything I own is Apple. I can't even tell you how many devices I have in my family. But Microsoft is a really well-ran business. And you should feel happy to own some Microsoft if you do decide to do that. So I like having some Microsoft, and I'm super proud to own things like Disney and Microsoft, and I feel good about those. They've been around for a long time. Again, maybe not the huge growth story that you'll get in like a Neo or some of these other ones, but you can still buy those, but having a nice weighting of Apple or Microsoft makes your portfolio a little bit less volatile. So Microsoft's looking good. Look, let's just end it. I just wanted to go through some things. Good earnings on Netflix. Market participants are looking for cracks, decelerating earnings, problems, or a growth story, which we got with Netflix that should continue the rally. I showed you the indexes. I showed you the stocks. The rally is looking like it's going to continue. There will be volatility. There will be profit taking. There will be shakiness in the candles. But if you follow the system as a guideline, you can run that rally. And just as an example, let's just go back to Apple. We were just talking about Apple, and it's a really good one for me to explain. So when I say follow the system, I'm saying basically when this went blue right here at 135. It stayed blue, and it had you sell right here on this candle at 173. So basically, it was a $33 gain. So, if you put in, what I say, 13,000. Okay, 130. So 13,500. So if you take 3,300 profit divided by 113 or 13,500. You're looking at a 24% gain just following the system. And what I'm saying is this just had a breakout. This is a pivot low where it broke out from. This just went green. You got two green triangles. It's Apple. They are having some problems with their iPhone 14, but this is just a good example. And this just went blue. If this goes blue and curls and brings you back up here to 175, and you go up 3,500 a share, you're gonna be stoked. Okay, so that's why, when I said, hey, bullish pivot, and, we got to trust the system, and I get you in early, and blah, 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 blah. It's true. Because, look, when I made that first video, it was right here when we were pivoting. But what happened? We went blue. And then we had all this BS, and it was like, what the hell? And it double bottomed. They do this to shake you out. But this will keep you in. And I stayed in my Dow stocks. And now I'm being rewarded for it, for trusting the system. And I know it's hard to do that, but it's supposed to be hard to do that. It's supposed to shake you out. So if you have a system and you stick to it like I do, it at least keeps your mind and your focus in the right place and from making a mistake. And, when it goes red, if you want to sell it, you can. Or You can do, let's just pretend this is Apple, you can let it come down and then just add more shares the next time it does it, and you can build more on your position. So those are just, a couple of ways to look at things. And remember, perspective is individualism, and individualism is perspective. And if we didn't have opinions and different perspectives and look at things differently, we'd have nothing to talk about. So we'll leave it there. My name is Chris. Thanks for watching to the end. Come on in the Discord. It's really fun in there, really cool. Got a great group of people. I'm really proud of all the traders in there. Guys are doing really good in there. I can't stress, to everybody watching, I can't stress how far people have come. And to the Jedis and to the members of the Discord, congratulations. You guys are doing really good. Seeing 70, 80, 90% win rates over there. Seeing leverage plays 200-300%, seeing some really good gains, seeing your minds think about things in multi-time frames and sector rotations and institutional support, and you're starting to take all that training and really become a Jedi, and it's starting to show rewards in your portfolio. So I'm proud of each and every one of you, and if you're not in there, come on in, it's free, and we could all hang out, chat, and learn, grow together. Thanks for watching to the end, and welcome to the wheelhouse.